Stavros is for M4Markets. Today, we're going to have a quick look at the UBS50 index and also Commerzbank to see if these are assets that they are affected by the banking crisis in the US, but also the spillover in Europe with the recent, of course, collapse of Credit Suisse and the last minute lifeline thrown there by UBS after the emergency merger that we saw headlines popping over the weekend and of course yesterday. I'm going to take a minute before we go to the charts to explain to you what is happening with Credit Suisse, what happened actually, just like in one slide, so that you have a good understanding of what is the story there and what is the background and why are we seeing markets reacting in the way they do. So guys, just so you know, after the 2008 crisis, Credit Suisse was in a much better actually position compared to other banks, and this gave them the confidence to double down on exposure, and that resulted in 50 years of litigation. They were involved in frauds, invasions, sanctions. The story didn't just begin now. They have been involved for many years in risky activity. They got away with having very poor operational risk management until recently the SEC started to question the group around some sort of cash flow statements that they reported in the 2021 earnings report. They relate mainly to the reports from 19 and 2020 rather than anything else, and that follows, of course, the group itself coming out and saying that we had ineffective internal controls after a new CEO took over. I think it was last year. Now, the bank's auditor itself also confirmed the deficiencies in the accounting, and that sparked further uncertainty. And unfortunately, that was during the collapse that we saw in the US, okay, the SVB, to be a bit more precise here. And that, of course, the banking sector was already under uncertainty and under risk because banking stocks have been already down, even in Europe. Now, Credit Suisse did look for investors, okay, but they have been already dried out over the past years. And practically speaking, there weren't any other stakeholders to participate. They weren't able, according to rules. So the SNB, which is a national bank in Switzerland, did and with the agreement, of course, other central banks, the Fed, the UK's, the Japanese, and the ECB, they agreed to take on action to safeguard depositors, okay, not investors, depositors, which is important. Now, UBS did take over the bank in an emergency merger around 3.25 billion. But the financial regulator from Switzerland, they did say that CoCos will be wiped out. Now, you might think, what is CoCos? CoCos are convertible bonds that were actually introduced after the 2008 financial crisis in order to kind of protect depositors, which are the taxpayers, rather than protect investors, who are bondholders. So CoCos are bonds, okay? The thing is that CoCos have been used also from CS, of course, in a different way. They have been introduced to clients as a way, because they're bonds, as a safe way to make profits out of them. But obviously now, after the FINMA said that the CoCos will be wiped out, all the investors are remaining still very, very, very concerned. And despite the fact that this merger has brought some confidence into the markets, okay, some relief recently, of course, because at least the money of the depositors are not going to go lost. Investors still remain under sort of a lot of stress, I would say, because, well, if you have anything more than 250K, pretty much you can lose that and nobody's going to return that to you. So that, in my opinion, is, from a fundamental perspective at least, why I believe that the downside risks are still elevated when we're looking at the EU's 50 index, as well as Commerzbank and other European banks. And that, of course, includes the sector in the US. Obviously, the activities and the measures that have been taken are different there and here, but I see this more of a global risk event rather than anything else. So with that said, this is the story in a one slide, and let's jump to the charts to see what is going on with the Euros 50 and Commerzbank. Starting with the Euros 50, you see that, and you remember that markets move in fives, right? I've been repeating that for like maybe even every video, who knows. We have corrected down below the 23 and actually kind of seen a move to the upside now after, it is important, tapping into this territory. Now, if we manage to do another high, it might be to get some sort of divergence over here, okay, like something like this. We're not far from another high over here, okay, but the question is, can we really get and close above the 50% at 41.50? If we fail to get above 41.50, then it would be a case where this is probably a 5-wave move again, because markets move in fives or progress in fives. And then probably we're going to see another leg to the downside with a first target around the previous low of the 37.70 or so, which is also the 50 Fibonacci. And if we lose the 50 Fibonacci then as well, then that would probably imply that, you know, sentiment is going to change, so there might be more downside coming. For now, we don't see any signs of further downside or further upside. We have these divergences probably have already played out over here. So what we expect to see is how the short-term price action here is going to potentially form an RSI divergence. We don't obviously always see moves based on what happens with the RSI, right? But price action is what matters first, and that's why we have to keep a very close eye to the 50, the 61.8 Fibonacci retracements, because as I said before, only if we do cross above the 61.8 can we see another leg to the upside. But even still, I think pressure might be coming back. Now, when we look at Commerzbank, and this chart is pretty much similar, I mean, in the short term at least, with the rest of the European banks, has returned back into its base channel, okay? And when prices return into base channel and we see moves to the upside, okay, yes, indeed upside, but kind of corrective, because you keep seeing overlaps, overlap here, overlap here, overlap here. There is no new high like without an overlap. That suggests that this might actually be a correction. All of this leg, this is not good news. I mean, on an individual perspective, and when you compare this to the European 50, the European 50 looks quite like that there is progress to the upside, which means a correction, a deeper correction could be followed by further moves to the upside. But the bank specifically, that doesn't look good. It's quite impulsive to the downside as well. We came straight to the 38 with the first leg to the downside. That assumes that as long as we are below 989, let's call it 10, there is risk for further downside down below, well, close to the bottom of the channel, perhaps even lower. Okay, because if this is indeed a correction, guys, then that means that we're going to see a continuation below that previous low, below where we started. Okay, for now, however, we cannot ignore this divergence, okay? This divergence meaning that, yes, there is potential for some upside. So it can also participate in this relief that we see currently. However, it's less likely that it can do, you know, it can go above the channel once again or to the previous peak. And it will be a more likely case that if any of these levels, 23, 38, or 50, or 61.8, stop price action, there would be a potential reversal back towards the bottom of the channel. And of course, we are below 10 already now. But the idea here would be, as we said before, that, you know, losing 850 or so is probably going to get us closer to the 737. But the short-term potential upside, it's of course signaled here by the RSI momentum.